We've been in sort of a global recessionary environment due to the pandemic. So everyone's inflation is low, which then means that it's difficult for a currency to stay competitive because all your trading partners are also enjoying low inflation. So on a relative basis, the rand, after being very undervalued, is now actually marginally overvalued.
Yes, it's time for Coffee Break Commerce, your business and Forex audio fix created by Absa Corporate and Investment Banking. Hello, and welcome back to the podcast that deciphers and decodes your economic and currency issues, all in the time it takes to drink a cup of coffee. So today we're talking about trends in the rand's value, and we're joined by Mike Keenan, who is not only principal and head of fixed income and currency strategy for Absa, but has recently won first place for the third consecutive year in the category of fixed interest securities at the Financial Mail Top Analysts Awards for 2021. Congratulations, Mike, and welcome back to the podcast.
Hi, Justine. Great to be with you again.
Okay, now, Mike, in previous episodes, you've told us about three models that you use at Absa to assess the rand's fair value. And these include the peer model, the portfolio balance approach, and the PPP, or purchasing power parity model. So listeners will remember, if they've heard these episodes, that the PPP model looks at the different values or prices one pays for different products, or a basket of products in different countries, as a comparison to look at the exchange rate relative to the cost of those goods. So when we spoke about the ins and outs of the PPP model, you alluded to certain trends in how the rand is valued, whether it's over or undervalued, and how those movements work. Can you tell us about what the models, all three of your models, are saying about current trends?
So for quite a long time now, or a number of quarters, we've had the rand being grossly undervalued based on sort of PPP principles. When the rand weakened up to 19 last year, it wasn't because inflation in South Africa had suddenly shot up to such an extent that the rand needed to weaken to 19 against the dollar. Okay, so there's a classic case where the currency moved beyond what those inflation differentials sort of implied. And since then, the rand has recovered, and now we are getting more and more in line with fair value. In fact, we've actually overshot to the other side. We are now slightly overvalued on a trade-weighted basis because, South Africa has seen very low inflation coming through, but so too have a lot of other countries. We've been in sort of a global recessionary environment due to the pandemic. So everyone's inflation is low, which then means that it's difficult for a currency to stay competitive because all your trading partners are also enjoying low inflation. So on a relative basis, the rand, after being very undervalued in previous years, is now actually marginally overvalued by about 7% on a trade-weighted basis. Now, how that fits into the rest of our views is that, as we discussed previously, our portfolio balance model is suggesting that the rand remains actually undervalued and it can push lower. Another model that we consider is our peer model. That model is actually also suggesting that the rand has strengthened too far compared to its high-yielding and commodity-based currency peers.
How do you balance the differing views that you may get from the three models in your toolkit if they're not saying the same thing?
Even though 2 out of the 3 models are suggesting that the rand should actually weaken from current levels, I suppose at Absa, we spend our time trying to identify what are the key FX themes at the moment and then apply the most relevant model. So it's not just a case of just equally weighting the models. We have to, use our subjectivity to see whether or not purchasing power parity is the theory of the day. Is it driving exchange rate markets? And I actually had a look this morning at the performance of currencies year to date and compared them to what their respective purchasing power parity levels are suggesting. And what's interesting is that all the currencies that are grossly undervalued on purchasing power parity grounds have actually remained weak and continue to weaken, whilst the ones that are overvalued continue to strengthen. So there's no evidence at this stage that purchasing power parity is a very dominant force in the FX markets. It's not to say it won't be a gain, and maybe over time it will. In fact, a lot of studies have shown that purchasing power parity does hold over the long term. But in the short term, other factors can drive the exchange rate. And that's why we are still comfortable in our view that the portfolio balance approach is the one to look at the moment. And that's why we still think that the rand can actually strengthen despite what our PPP and our peer model is saying.
That's all for today's Coffee Break Commerce, created for you by Absa Corporate and Investment Banking. Thank you, Mike Keenan, and thank you, listeners, for being part of the conversation. We're always looking for new topics to explore in future episodes, so please keep sending your comments and FX questions to internationalbankingservices@absa.co.za. Join us next time for another Coffee Break Commerce.